Cipher Mining wrapped up the trading week on a high note, closing at $12.28 per share. That represented a gain of about 3.5% on the day, and it capped off what has been a very eventful stretch for the company's stock. Investors who've been following along know that this week has been filled with volatility, sharp moves upward, a healthy pullback, and now a firm finish. Ending the week at $12.28 gives us a natural pause point to reflect on what's driving the action, whether the story is changing, and how to think about Cipher heading into the weekend and beyond. To start, it's worth grounding ourselves in what hasn't changed, because that's where the conviction comes from. Cipher Mining continues to execute on its operations. In its August operational update, the company reported that it mined 241 Bitcoin in the month. It sold 42 of those coins, and ended August with a treasury of 1,414 Bitcoin. That balance sheet leverage matters, because every dollar move in Bitcoin's price has a direct impact on Cipher's asset value. At current levels near $115,000 per Bitcoin, that stack alone is meaningful. On top of that, Cipher is running a self-mining hash rate of 23 exahash per second, with a target to push that up to 23.5 by the end of the third quarter. The company's fleet efficiency sits at around 17.3 joules per terahash, which places it in a competitive position relative to peers. The Black Pearl Phase 1 facility is increasingly central to this story. In August, nearly 40% of the company's Bitcoin production came from Black Pearl. That tells us the build-out is working, and the facility is quickly scaling into one of the most important parts of Cipher's portfolio. But the real kicker with Black Pearl is that it isn't just a Bitcoin mine. It's being designed with the flexibility to host high-performance computing workloads, including artificial intelligence. That dual functionality is why the market is starting to treat Cipher differently than a pure-play miner. Investors are increasingly hungry for stocks that provide exposure to the AI infrastructure build-out, and Cipher is positioning itself to be one of those names. So why did the stock finish the week higher? There are a few reasons. First, the macro backdrop remains supportive. The Federal Reserve cut rates by a quarter point this week and signaled that as much as 75 basis points in additional cuts could be delivered before the year is out. Lower rates make capital cheaper, they make future growth more valuable today, and they boost risk appetite across the market. For a company like Cipher, which has a growth-heavy narrative tied to both Bitcoin and AI infrastructure, a lower rate environment is a direct tailwind. Investors don't need to squint too hard to see how that benefits Cipher in the near and long term. Second, Bitcoin itself has remained fairly resilient. It hasn't surged dramatically higher this week, but it has managed to hold firm around that $115,000 mark. For miners, stability at elevated levels is just as good as a breakout, because it ensures profitability. Cipher's operations and treasury both benefit from Bitcoin holding ground here. Even when ETF flows have wobbled and some investors have rotated out of crypto products, the core Bitcoin price has been steady enough to keep miners in the green. That backdrop is important, because it provides the foundation for Cipher stock to respond positively to other narratives. The third factor is sentiment. After several strong rallies and a midweek pullback, traders had a chance to reassess whether the run in Cipher was sustainable. The fact that the stock rebounded into the close of the week suggests that buyers are still very interested at these levels. It also suggests that the pullback we saw wasn't the start of a reversal, but rather a healthy consolidation after a fast move. Stocks don't go up in straight lines, and in volatile sectors like crypto mining, pullbacks are part of the game. The key is whether buyers step back in, and today they clearly did. Looking deeper, what really makes Cipher interesting is this idea of it as a hybrid play. On one side, it's a straightforward Bitcoin miner, with rigs deployed, hash rate growing, and Bitcoin being stacked every month. On the other side, it's quietly becoming part of the AI infrastructure story. The Black Pearl facility is already contributing a huge portion of output, and management has made clear that it's being built with AI and HPC hosting in mind. That optionality is powerful. It means that investors don't have to bet solely on Bitcoin's price to justify a position in Cipher. They can also see the potential for Cipher to plug into one of the most explosive growth markets of the next decade. That diversification of narrative is what's earning Cipher a re-rating from analysts and gaining it more attention among institutional investors. Of course, it's worth acknowledging that none of this comes without risk. Bitcoin is notoriously volatile, and if it were to fall sharply, Cipher would feel the pain quickly. Energy costs are another variable that can shift margins. Regulatory scrutiny, whether aimed at crypto mining or AI infrastructure, is only going to increase as both industries scale. And then there's execution. Building out Black Pearl and pivoting some of its capacity toward AI hosting is easier said than done. Delivering on that promise will require discipline, partnerships, and capital. These risks don't negate the upside, but they're the reason investors need to stay balanced in their outlook. So how should investors think about Cipher as we head into the weekend? From a technical perspective, the stock is now comfortably holding above $12. That's an important psychological level. The next resistance zone sits around $12.50 to $13. If Bitcoin can stay firm and sentiment holds, Cipher could easily make a run at those levels in the coming sessions. On the downside, $11.50 remains an important support area. As long as the stock stays above that, the uptrend remains intact. Watching volume will also be key. Strong rallies supported by heavy volume are more sustainable than low-volume drifts. For long-term holders, the thesis remains intact. Cipher is producing Bitcoin efficiently, growing its hash rate, holding a meaningful treasury, and scaling its most important facility. The Fed's shift toward easier policy is supportive, Bitcoin stability provides a cushion, and the AI narrative is an upside kicker. That combination makes Cipher stand out from peers who are still essentially one-trick ponies. When analysts and investors talk about diversification in this space, Cipher is the example they point to. For traders, the message is that volatility cuts both ways. There will be pullbacks, and there will be sharp rallies. The key is to know the levels that matter and to have a plan for both scenarios. Right now, the setup is favorable. The stock has consolidated, buyers have returned, and the broader narratives are aligned. That doesn't guarantee smooth sailing, but it does suggest that Cipher remains a stock worth watching closely. For a weekend video, the best way to frame this story is as a hybrid evolution. Cipher Mining is no longer just a crypto miner. It's becoming an AI infrastructure play, backed by real operational growth and a favorable macro backdrop. The stock's finish at $12.28 is a marker of that shift being recognized by the market. Investors aren't just buying Bitcoin exposure here. They're buying into a company that's positioning itself at the intersection of two transformative trends. That's why Cipher has outperformed many of its peers in September, with gains of around 40% compared to relatively flat Bitcoin prices. The market is signaling that it sees something more here, and it's hard to disagree. So to wrap it up, Cipher Mining ended the week at $12.28 per share, up 3.5% on the day and near the highs of this recent rally. The company's fundamentals remain strong, its Black Pearl facility is scaling quickly, and its AI optionality continues to attract attention. The Fed's dovish shift, Bitcoin's resilience, and investor sentiment all combine to give the stock a lift into the weekend. Risks remain, as they always do in this sector, but the broader story is one of strength, growth, and evolving opportunity. Cipher is no longer just a Bitcoin miner, it's becoming a hybrid player in crypto and AI infrastructure. That's a story worth paying attention to, and it's one that could define the stock's trajectory in the months ahead.